Welcome back to Golden Rule Radio. We have a very special episode this week. We're going old school as Eric and Tori are both out, and it's good old Robert back joining us this week. Robert, welcome back to the studio.
Thanks. It's good to be back.
Kick us off with gold up, $230 over the last month or so, and seeing a little bit of a stall here in the gold market. What do you think we're going to see over the next couple weeks?
Well, the last time I was in here, I think that we were in the 1270 range with gold, and suggested that that was the buying opportunity. It went from 1270, and here we are at above 1500. It's having a pretty good run and has been stalling out at a very key level that I don't know many people have really zoomed back far enough in the chart to see, but the 1525 level was the support level. If you go back in the chart to where gold was above $1,500, in between 1500 and 1900, you have a support level. If you look at the chart, it has a clear support level at 1525. This was what a lot of chart analysts were talking about when gold was up at that elevated level. Well, 1525 was the support, and it eventually broke that support. And if you look at when it broke it, it continued down very quickly below 1525. What's the point of this? Well, here we are in the last 5-6 years. Gold has slowly been making this bottom at 1,050 in December 2015. We've slowly been stair-stepping higher. And here we are running back into the 1525 level on the upside. So that previous support became what?
Well, support becomes resistance.
There you go. So that's where we hit resistance, right? We ran into 1525, got a little bit above it. I think it pinpricked through it, right? In an intraday high, got to what, 1540?
Yeah, 1535, 1540.
I would call that positive for gold because this is the first time we've been back to 1500 since it broke down below 1525. So the first time as we were running up, it pinpricks through it. Now it hasn't closed above 1525, but it pinpricked through it with the intraday, and I think that's significant. I think where we are now in the next couple weeks, gold needs to figure out which way it's going as well as the dollar, but it wouldn't surprise me to see some weaker prices with gold. It needs to do that with the, 18% run we've had since 1270. So I don't know if it's going to happen in the next couple weeks, but we have run into that previous support level that's become resistance, and so we're not surprised to see it stopping around 1525.
Sure, and we've had this stall taking place since about August 7th, like you said, with a high point around 1535, 1540, a low point just below 1500. I think we had a brief move down to around 1492. So obviously gold needs to pick a direction. One thing I've always looked at in markets is it does seem like when you have a trend or a directional change, at least in the short or medium term, obviously long-term trend changes take a long time, but short-term trend changes tend to happen pretty quickly. So stalls like this, it makes me wonder if maybe we're just seeing some of the trading indicators shake out. With RSI going incredibly overbought, with some moving averages coming back to, say, the 200-day and the 65-week and some of the long-term averages starting to converge, it makes me wonder if we could see a third step up in this C-wave drive, something like an Elliott wave 3 drives pattern up, maybe another $100, because if you get back to that same trading range you were talking about back, in 2009, 10, 11, before we started the bear market down, we did have a nice little bump back up around 1600. So I completely agree. I think we're looking for the metals price to turn around. The question is, does it do it from here, or are we just consolidating? Is this a place where we're finding a ceiling, or is this a place where we're just taking a break and ready to take a step up to the next floor? Before we move over to silver, one last thing that our numismatist here I was talking to before the show, Drew, brought up. The 65-week moving average is now at the highest point since October 2014. And moving a 65-week moving average, if you guys follow the moving averages, is like turning a train on the train tracks. It takes a very long time. So this is a pretty big deal. Not only has the shorter term average exceeded the longer term average, so we had this average cross recently, but the 65-week is now putting in new highs. So moving over to silver, what you got for us, Robert?
Silver's followed gold. I think that's pretty clear and has not led the way. Silver's lagged, obviously. And the ratio being right around 87, 88, that's still ridiculously spread between gold and silver prices. So makes silver very attractive. And any pullback, I think it's a buy on weakness.
Sure, and we've talked about this over the last couple weeks. I mean, gold has already exceeded all of these price points from the last 5-6 years. Silver hasn't. So there's a ton of reasons why silver at $30, puts that ratio back in the, even still on the high end, up in the 60s. So not obviously up in that top trading range, 65, 70, 75, 80, or even up where we're at now, but a $10, $15 rise in silver, and it's still just catching up with what gold's already done.
Well, the thing that tells me that we're still really early in this move with the metals market, that we're just getting started with it, is the American public is not buying metals right now. I mean, you have the rest of the world buying it, and you have central banks buying gold, but you talk about the American public, they're not buying metals. And when they do, I think they will elect to go towards the silver market, and that's where you'll see silver going up $1 a day like it did last time it had a good run.
Sure, and I think there's argument that we certainly have seen buying pick up in the metals market, but not to the point where it's the actual American public as a whole recognizing the potential in it. And usually people get into a market not because of opportunity, but they get into a market because of fear or panic coming out of something else. That's what we saw back in the previous metals move. So that's why we do shows like this. We want people to find opportunity, not react to events that are taking place.
Jumping to platinum, we'll bring a comment and a quote and a question from the listener last week asking about the price of physical platinum. Can you acquire it a lot cheaper? I don't remember what the exact number was, but yes, you can. I think the number that he quoted on the spread on the platinum premium was out of this world, really. And I don't know where you're trying to buy that platinum, but call us. We can trade platinum pretty quickly.
Sure. I think he was quoting spread somewhere around 25%. I don't know if he was talking about the product spread or if he was talking about cost over spot price. But either way, 25% is pretty expensive right now.
Definitely don't buy from whoever's doing that. Platinum has been pretty reasonable on the spread. It's been at a wider spread in the past, but right now we've been acquiring a lot of it for clients. And so give us a call.
Sure, and there are products out there, certainly even in the silver market especially, there are some products out there that are pretty spread heavy right now that you'd want to talk to somebody in the market to maybe look at some other options. Silver American Eagles versus junk silver. Why would you do something like that? So you definitely want to speak to experts in the industry if you're looking at stepping into metals, especially if you don't have a lot of experience with buying physical metals. If you're used to your GLD and your SLV trades and you're looking at branching into physical ownership of product, as Robert said, give someone like us a call so we can kind of talk through what's the difference between junk and American Eagles and bars, and how do these things relate to each other.
And there's no need to get cute with platinum either. I mean, 1 ounce bars do the trick. That's really all you're going for is the platinum metal itself, the commodity, instead of trying to buy a Noble or something like that at a spread that might be 20-something%. But
sure, and if you're looking at the platinum charts right now, you want to be jumping on those lower priced items. I mean, the platinum chart has just been following this pretty defined rising trend box for a while now. Now, here's to me where it gets interesting. I brought up the moving averages on gold a second ago as the longer terms have moved up. Platinum's moving averages are at a meeting point here over the last week or so. And we're right smack dab in the middle of this rising trading range that you can see on the chart. So my assumption would be with platinum moving up to around the 960 range over the next couple weeks, especially moving into a fall season, which traditionally shows pretty strong metals prices. That's going to move platinum up to our next fib level that we haven't broken through yet, the 786, as well as breaking us out of this trading range and possibly signaling like what we saw in gold earlier this year. So the move in platinum, $100 up in platinum ain't a lot of money, and it could happen pretty quickly.
Yeah, well, can you guys hold? I'm going to go buy some right now.
Sounds good to me. And finally, Palladium. I don't know if we should just talk about the Dow because Palladium and the Dow are pretty much identical. Palladium is not playing the monetary metal game right now, but instead the industrial metal game. So you can kind of continue to overlay these charts. Palladium did bounce, and Palladium is still arguably bullish, although I'd argue toppy. We've had higher highs, higher lows, but the movement up really hasn't been much over the last year. We had our big run up, and it looks to me like we're butting into a pretty strong brick wall.
Because we should talk about rhodium. It's almost $4,000 an ounce now. I think we talked about having the opportunity to buy it at $600 and didn't do that.
Well, some people didn't do that.
But rhodium is on a tear. Previous high being $10,000 an ounce. It's got some room to run here from
definitely some room to run.
3,800, wherever it is.
So that's rhodium tripling in price just to breach the old highs, just like platinum tripling in price just to breach the old highs. Whereas palladium is could get cut in half just to get to the old highs. So I think in the platinum group metals, you're going to see some stuff bouncing around.
Turning to the dollar, because that is still the king dollar market.
King dollar is back in the studio.
I think this is one of the neatest points to make with this recent gold rise is what's the dollar done? So from gold, the gold side moving from 1270 to over 1500, almost 1550, the dollar index is nearly the same at 97.98. And so, a lot of people say, well, it's going to move inversely. Well, gold's had quite a bit of a rally here, and the dollar has not gone down like you would expect. That has to do with the currency units tied to the dollar index. But still, that's a neat point to see. And it's been mentioned that the dollar and gold can move together, and here is a prime example. Gold's up 18% or so. The dollar is roughly flat, not down as you'd think it would be if it had a direct inverse relationship. So the dollar possibly could be headed higher from here after it gets a clear direction from one of the other currencies.
Yeah, namely, I think those other currencies are coming out of Europe, right? I mean, with the issues going on in Europe and some of the bank rates that we've discussed a couple weeks ago that Tori brought up. I do think it's worth mentioning that when you have a rising currency and you have rising commodities priced in that currency, all that really does is exponentially inflate how much things like gold are actually going up. They're not up 18% only. They're up 18% on top of the other side of that equation, the dollar also being up pretty substantial. So this is a big move.
It is.
We're seeing big things changing right now. It's not surprising that the Dow is finding a top. It's not surprising that some commodities are finding a top. It's a little surprising that the dollar's going up because it ain't doing it on its own merit. It's doing it because of Brexit. It's doing it because of lending issues in Europe. It's doing it because of issues in Venezuela. It's doing it because of issues in the Middle East. So the dollar is just acting as that sort of world hedge, world reserve that it's supposed to be. But that doesn't continue indefinitely. Trends change.
No, and Trump doesn't like that, so...
No, he'd love his cheaper dollar.
Put pressure on anyone he can via
and
tweets.
has tried.
Has tried. And is anybody tired of hearing Trump talk about Jerome Powell and the Fed not lowering interest rates anymore? He's going to keep harping on that.
So finally, since we're talking about the markets, let's go ahead and bring up the Dow just real quick. I mean, you don't really need to if you saw the Palladium chart a second ago. But I do think it's worth mentioning that even if you ignore the December fall, right? That 19, I don't want to say 20% because then people will get mad because it didn't do 20%. But if you ignore the just shy of 20% fall in the Dow last December, obviously it is still in bullish territory. Minus that one outlier, it's higher highs, higher lows. The transports are not. The transports have failed to put any type of long-term higher high in. And even in the short term, it's putting in lower highs and lower lows. So we've always argued Dow theory, transports lead the markets. If you're not shipping goods for sale, then you're not selling goods, period. So if the transports continue down, how far behind that do you think that the industrials lag? And when do they play catch up with the transports on the bearish side?
Yeah, that's a good point. And one of those sayings, selling begets more selling. If you've had selling going on in the transports, which has taken it lower, you'd think it'd beget more selling in that type of market. And I'm going to throw out that I've heard the word recession a lot lately. And does the word out there being talked about with people using the word recession, does them using the word recession beget an actual recession? I think that's where we're headed, if not maybe already there, if we actually had legitimate calculations to use in those statistics.
Sure. So is that like the psychological?
You throw out the word enough, and then
self-fulfilling prophecy.
Enough people start to contract their behaviors, consumer behaviors, become cautious, and then it just continues to spiral that way. Could happen. We could be there.
Sure. So it's like when I get calls from clients saying, how come fib levels work? I say, because they do.
Right.
They're their own self-fulfilling prophecy. Maybe spending 2 years saying the word recession on MSNBC 73 times a day on the 24-hour news cycle ends up helping usher one through. So that's going to do it this week. We thank you for stopping by Golden Rule Radio. If you like what you heard, hit the subscribe button, ring the bell. Join us in the comments. We'll try to get to your questions. If you want some more information, you can head on over to Twitter at ICA Gold. Facebook is McIlvaney Financial, or our website, McIlvaney.com. As always, if you'd like to speak to one of us here about your personal precious metals portfolio, you can give us a call at 1-800-525-9556. Thanks for listening.
Have a great week.